Welcome to part 1 of our SAP MM Procure-to-Pay series. In this video, we're diving deep into the very first step of the P2P process, the purchase requisition, PR. Think of a PR as the formal shopping list for your organization. It captures who needs what, how much, and by when. A well-structured PR sets the stage for a smooth procurement flow, eliminates costly errors, and accelerates approval cycles. Why focus on purchase requisitions? Here's the deal. 1. Error prevention. When you define material codes, quantities, delivery dates, and account assignments correctly in a PR, you cut down on mismatches, rework, and back-and-forth emails. No more guessing or data entry mistakes. Everything you need is captured up front. 2. Standardized approvals organizations rely on strict approval hierarchies to control spending. By leveraging SAP's release strategy, you automate approvals based on value thresholds, material group, or purchasing group. This ensures the right managers sign off at the right time. No bottlenecks, no surprises. 3rd foundation for purchase orders. A purchase requisition isn't the final order. It's the blueprint. Once fully approved, PRs are converted into purchase orders, POs, carrying over all critical details. This saves time, maintains data consistency, and keeps auditors happy. 4. Visibility and reporting. Every open PR provides real-time insight into upcoming demand and budget commitments. Procurement teams can forecast spending, identify urgent needs, and balance supply across plants and locations before POs are even issued. In this section, you'll learn what a purchase requisition is and why it's so critical, the end-to-end PR creation process using transaction E51N, how SAP's release strategy enforces approval rules automatically, best practices to keep your PRs clean, accurate, and audit-ready. Common pitfalls like missing account assignments or free text entries, and how to avoid them. By mastering the PR stage, you'll build a rock-solid procurement foundation, ready to eliminate errors, speed up approvals, and empower your organization with accurate demand data. Let's jump into the world of purchase requisitions in SAP MM. Section 1. What is a purchase requisition and why it matters? A purchase requisition, PR in SAP MM, is the formal trigger of the entire procure-to-pay cycle. Rather than jumping straight to creating orders, organizations first capture internal demand via a PR, ensuring that every downstream document carries accurate, approved information. Think of it as your source of truth for upcoming purchasing activity. 1.1 PR defined. Core concept. A PR is a request initiated by a department or user to procure materials or services. It records critical details, material numbers, quantities, delivery dates, storage locations, and account assignments, so procurement teams can plan and action correctly. SAP Object. In SAP, PRs are stored as purchase requisition documents, transaction type NB, each assigned a unique PR number. You create them in ME51N, view or change them in ME52N, and monitor via ME53N. The system knows exactly which SKU with which price and specs is needed. Accurate account assignments, cost center, internal order, WBS element, ensure that costs flow to the correct financial objects, preventing downstream reconciliation issues. 2. Controlled spending. PRs provide visibility into planned procurement before any commitment is made. Budget owners can see upcoming spend, adjust forecasts, and approve or reject requests. Release strategies enforce corporate policy. Low-value PRs may auto-approve, while high-value or strategic materials require multiple sign-offs. 3. Audit and compliance. With a complete audit trail, who created the PR, when, and who approved it, organizations satisfy internal controls and external auditors. Document text fields capture business justification, vendor preferences, or special instructions, providing context long after the PR is created. 4. Operational efficiency. Instead of phone calls or emails, PRs centralize requests in SAP. Procurement teams pull all approved PRs into a consolidated overview, speeding up batching into purchase orders. Real-time status tracking, open, approved, ordered, highlights bottlenecks and helps managers intervene proactively. 1.3 Typical PR scenarios. Raw material replenishment. A production planner identifies low stock of raw plastic beads. They create a PR for 5,000 kilograms with a required delivery date next week, assigned to plant 1,000, storage location 0001, and cost center 3200. Office supplies. An administrative assistant orders printer paper and toner via a PR, specifying a standard office supplies material group and assigning cost to the administration cost center. Service requests. Facilities team submits a PR for quarterly HVAC maintenance, entering a service master or detailed free text description and assigning cost to a facilities maintenance internal order. 1.4 Key PR elements. Explained PR field purpose material. Material master code or free text description for services. Quantity and UOM, how many units and the unit of measure, EA, kg, LTR. Delivery date, when the item is needed in the specified plant location. Plant and storage location, defines the destination for receipt and inventory tracking. Account assignment links cost to cost center, internal order, project, etc. Purchasing group team, or person responsible for sourcing and follow-up. Document text business justification, special instructions, vendor notes. 1.5 Best practices for PR. Set up one use material master. Whenever possible, always reference an existing material code. This auto-populates purchasing info, unit price, vendor list, and avoids spelling errors. 2. Define mandatory fields at configuration. In SAP IMG, SPRO, set critical fields, account assignment, delivery date, document text, as required to prevent incomplete PRs. 3. Leverage purchasing info records. Info records PIR store vendor material combinations, default prices, and lead times. When a PR references a material with an active PIR, price and delivery fields auto-populate. 4. Standardize PR templates. Use custom PR templates in ME51N for different categories: raw materials, services, capital goods, pre-configuring common fields to speed up entry and reduce errors. 5. Train end users thoroughly. Provide quick reference guides or e-learning modules on ME51N. Emphasize picking the right account assignment and avoiding free text entries. 1.6 Common pitfalls and how to avoid them. Pitfall impact solution. Free text material descriptions. Inconsistencies, hard to report. Enforce material master selection, restrict free text. Missing account assignment PO conversion errors. FI discrepancies. Configure mandatory account assignment fields in SPRO. Unrealistic delivery dates. Supplier disappointment. Expedited fees. Implement delivery date tolerances and validation rules. Skipped document text. Lack of business context. Audit flags make document text required for categories greater than threshold. Overly complex release strategies, approval delays, user frustration, balance control with usability, group similar rules. By mastering the purchase requisition stage, capturing complete, accurate, and approved demand, you lay a solid foundation for every subsequent P2P step. In Part 2, we'll transform these requisitions into purchase orders, examine RFQ scenarios, and explore best practices for vendor selection and order release. Stay tuned. Part 2, From Requisition to Purchase Order. RFQs, PO creation, and best practices. In Part 1, we mastered purchase requisitions, PRs, establishing a clear, approved demand signal in SAP MM. Now, in Part 2, we'll take those requisitions and turn them into formal purchase orders, POs. Along the way, we'll explore request for quotation, RFQ scenarios, cover the PO creation process in transaction ME21N, and share best practices to ensure you secure the best prices, lead times, and supplier performance. 2.1 When to use RFQs versus direct POs. Before you issue a PO, you often need supplier quotes, especially for high-value, non-catalog, or new materials. SAP's RFQ process sits between PR and PO. RFQ ME41/ME47/ME49. 1. ME41. Create RFQ, reference PR line items to generate one or multiple RFQs. Second supplier response, ME47. Enter the quote, unit price, validity period, delivery date. 3. Comparison and selection, ME49. Review vendor offers side by side, compare prices, terms, and lead times. 4. Convert to PO, ME21N. Choose the best quote to automatically populate PO fields. Direct PO. Use for standard catalog items, blanket contracts, or when an existing info record already defines price and terms. Speeds procurement for repeat buys. Key guideline. Use RFQs when you need competitive bidding or formal quotes. Use direct POs for routine orders under existing agreements. 2.2. Creating a purchase order with ME21N. Once your PR is approved and RFQs, if any, completed, start PO creation 1. Launch ME21N, create purchase order. In SAP GUI or Fiori, open transaction code ME21N. Select document type, standard PONB, subcontracting L, consignment K, or stock transport order UB. 2. Reference the PR or RFQ. In the Reference tab, choose Purchase Requisition or Quotation. Enter the PR number or RFQ number and press Enter. The system pulls in line items, material, quantity, account assignment, delivery date. 3. Verify and enhance. Line items, material data. Confirm the correct material master and plant. Info record data. If a purchasing info record exists, default price conditions, order unit, and lead time will populate automatically. Account assignment. For service or capital goods POs, ensure cost center or project assignment is correct. 4. Header data. Vendor. Enter the vendor number. The system suggests preferred suppliers if defined in info records. Payment terms and Incoterms. In the header or vendor data tab, verify or adjust as needed. Delivery address. Confirm shipping plant and storage location. 5. Conditions and pricing. Conditions tab. Review the price, discounts, surcharges, freight. Use condition type, PB00, PBXX, settings for accurate calculation. Manual. Overwrite only override prices or dates when absolutely necessary, and document the reason in the text fields for audit. 6. Texts and attachments. Item text. Include special instructions or packaging requirements. PO text. Attach legal terms, service descriptions, or drawings via SAP's attachment functionality. 7. Check and save. Press check, F8, to validate data. Resolve any errors, missing plant, invalid account, or price discrepancies. Save to generate the PO number. 2.3 PO release strategy and workflow. Just as PRs use release strategy, POs may also follow approval rules. SPRO configuration. SAP IMG, materials management, purchasing, purchase order, release procedure for purchase orders. Define criteria, PO value, vendor, purchase organization, to route POs for manager approval. Workflow integration. Automate email notifications or Fiori inbox tasks to accelerate PO approvals. Track release logs to view who approved or rejected at each stage. Best practice. Keep PO release strategies lean. Too many levels slow procurement, but too few increase risk. Balance control with speed. 2.4 common pitfalls and solutions in PO creation. Pitfall impact. Solution: incorrect info record usage, wrong price or lead time. Maintain info records diligently. Review annually. Manual price overwriting audit. Discrepancies, payment disputes. Restrict price overwrite via authorization profiles. Missing delivery date, updates, late deliveries. Production stoppages. Validate delivery date against vendor lead time settings. Omitted account assignment, misposted cost. FI reconciliation errors. Make account assignment mandatory for non-stock items. No text attachment, lack of clarity. Vendor confusion. Attach SOWs, data sheets, and PO texts for complete context. 2.5. Best practices for efficient PO management. 1. Leverage outline agreements contracts. ME31K and scheduling agreements. ME31L for long-term deals. Contracts define fixed prices and terms for multiple POs. Scheduling agreements. Predefined delivery schedules, ideal for JIT scenarios. 2. Monitor open POs regularly. Use ME2N, list by PO number, or ME2L, list by vendor, to view open, partially delivered, or overdue POs. Identify aging POs and follow up with vendors proactively. 3. Use PO, confirmation, and GR tracking. Activate confirmation control in purchasing info records to require vendor confirmations. Track confirmations via ME2O or vendor confirmations list. 4. Implement message control and alerts. Configure SAP's alert framework or SAP business workflow to notify procurement if delivery dates slip or order values exceed thresholds. 5. Archive old POs. To improve system performance, archive completed or canceled POs using SAP Archive Link. Maintain retention policies for audit compliance. By converting clean approved PRs into well-structured POs and using RFQs, outline agreements, and robust release strategies, you ensure your organization secures the best deals, maintains compliance, and drives operational efficiency. In Part 3, we'll explore goods receipt processes and how GR ties back to finance and inventory valuation. Stay tuned. Part 3. Goods receipt, GR, recording and valuating inbound stock. In Part 2, we converted approved requisitions into purchase orders, POs, ensuring accurate vendor, material, and pricing details. Now it's time for the critical next step. Goods receipt, GR. This is where the physical receipt of materials is confirmed in SAP, updating inventory balances and triggering financial postings. A precise GR process ensures stock accuracy, reliable valuations, and seamless finance integration. 3.1. What is goods receipt? A goods receipt is the SAP transaction that records the arrival of ordered materials into your warehouse or plant. It serves 3 primary functions. 1. Inventory update increases unrestricted use stock by the received quantity. Tracks batch or serial numbers for traceability when required. Second valuation posting posts accounting entries, debit inventory account, credit GRIR clearing account. Ensures finance reflects the correct value of goods received, even before invoice verification. 3. Quality and inspection, optional QM integration. If quality inspection is active, GR can create inspection lots for sampling. Receipt into quality stock until inspection is completed. 3.2. Performing a GR in MIGO transaction code. MIGO SAP's Unified Transaction MIGO streamlines all goods movements, including GR, GI, and transfer postings. Here's how to post a GR against a PO. 1. Enter MIGO. Select Goods Receipt from the dropdown. Choose Purchase Order as the reference document type. 2. Specify the PO number. Enter your PO number in the PO reference field. The system retrieves line items, material, quantity ordered, plant, and storage location. 3. Verify details. Quantity, adjust if partial delivery. Storage location, confirm or override if stock should go elsewhere. Batch type serial numbers. Enter if batch management or serialization is enabled. 4. Select movement type asterisk 101-GR against PO. This is the standard type for PO receipts. The movement type determines stock and accounting behavior. Enter optional fields. Text field, note discrepancies, goods condition, or urgent instructions. Delivery note, capture vendor's GR number for traceability. 6. Check and post. Use the check button, F8, to validate data. Fix any errors, e.g. missing storage location or invalid batch. Post to complete the GR. A material document and accounting document are created. 3.3 Financial impact of GR. When you post a GR, SAP automatically posts to FI, account debit, credit inventory asset account. Debit, received value. GR, AR clearing account. Credit, received value. The GR/IR clearing account holds the liability until the vendor invoice is posted. MIRO, at which point the clearing account is reversed and the vendor liability account is credited. This two-step process ensures inventory value is timely recorded, while cash flow is recognized only upon invoicing. 3.4 GR variations. Besides PO-based receipts, MIGO handles other GR scenarios. 1. GR for production order. Movement. Type 101 can also post against a production order, increasing finished goods stock. Reference the production order instead of a PO. 2. Initial stock entry, opening balances. Transaction MB1C with movement. Type 561 sets initial stock balances when implementing SAP. Carefully plan to avoid duplicate or inaccurate opening quantities. 3. GR reversal. If you accidentally post a GR, reverse with movement. Type 102 in MIGO. Always reverse promptly and document the reason. 4th GR into quality stock. When quality management is active, choose to post into inspection stock using appropriate movement type. Post to unrestricted use only after inspection completion. QA release. 3.5 Best practices for accurate GR1. Match PO versus. Delivery. Always compare the quantity and condition of goods against the PO and delivery note. Record any shortages or damage immediately in the MIGO header text. 2. Use barcode or RFID scanning. Integrate mobile scanning to reduce manual entry errors. Scanners can automatically populate material, batch, and quantity fields. 3. Perform cycle counts. Regular cycle counts reconcile physical stock with SAP records. Use transaction MI01 to create counting documents, and MI07 to post count differences. 4. Quality inspection integration. Configure QM integration for critical materials to ensure quality before releasing to unrestricted stock. Automate inspection lot creation in MIGO with inspection setup in Material Master. 5. Monitor GR/IR account * run. Reconciliation report MB5S monthly to clear stale entries in GR/IR clearing account. Investigate discrepancies between GR value and invoice value promptly. 3.6. Common pitfalls and mitigations. Pitfall impact. Mitigation posting to wrong storage location stock in wrong bin. Picking delays. Validate storage location in MIGO. Standardize location codes. Missing batch serial entry traceability gaps. Compliance issues. Enforce batch field for managed materials. Partial versus full delivery confusion. Receiving excess or insufficient QTY, train on adjusting quantity field. Use delivery note info. Neglecting inspection stock. Quality approved goods used prematurely. Enable inspection stock posting. Monitor QA stock. Delayed GR posting. Mismatched inventory versus finance valuation, set SLA for GR posting within 24 hours of physical receipt. By executing timely, accurate goods receipts in SAP MM, you ensure inventory integrity, uphold financial accuracy, and pave the way for smooth downstream processes like invoice verification. In Part 4, we'll dive into goods issue GI, the outbound side of inventory management, and explore how to record consumption, production issues, and scrapping. Stay tuned. Part 4, Goods Issue GI, recording outbound stock and consumption. In Part 3, we covered goods receipt to bring materials into your warehouse, updating inventory, and triggering financial postings. Now it's time to look at the outbound side of inventory management in SAP MM. Goods issue GI. A properly executed GI ensures that when materials leave stock, whether for production, sales, sampling, or scrapping, your system accurately reflects the consumption, posts the correct cost allocations, and maintains real-time visibility into available stock. 4.1. What is goods issue? A goods issue in SAP MM records the removal of materials from inventory. Unlike a goods receipt, which increases stock, AIGI reduces stock quantities and posts associated costs. Common GI scenarios include 1. Production withdrawal. Raw materials consumed by a production order or process. Movement type 2. 6.1 posts consumption directly to a production order, debiting WIP or production cost center, and crediting inventory. 2. Cost center issue. Materials used internally, e.g. office supplies, maintenance. Movement type 2. 01 charges the cost center, debiting a cost center account and crediting inventory. 3-point sales delivery. Outbound shipments against a sales order in SD module. Triggered by VL01N/VL02N, which calls MIGO behind the scenes. Movement type 601 or 641 for billing relevant issues. 4. Scrapping. Discarding damaged or obsolete stock. Movement type 5. 5.1 post to a scrapping cost account, ensuring inventory is reduced and a scrapping expense is recorded. 5. Sampling notch quality testing. Small quantities removed for quality inspection. Movement type 2. 01 or dedicated sampling type, often into a QA stock. 701 for inspection scrap. 4.2 posting a GI with MIGO SAP's unified transaction. MIGO also handles goods issues. Here's how to post a standard issue for production consumption. 1. Enter MIGO. Select Goods Issue from the drop-down. Choose the appropriate movement type, e.g. 261 for production order. 2. Reference document. For production issues, select Order as reference and enter the production order number. For cost center issues, choose Cost Center in the Account Assignment tab. 3. Verify material and quantity. MIGO pulls material code, batch if managed, plant and storage location. Adjust quantity to reflect actual consumption. Partial issues are acceptable. 4th. Account assignment. Production order, GI post to the order, crediting inventory and debiting WIP or order costs. Cost center, GI post to a cost center, crediting inventory and debiting the cost center. 5. Check and post. Click Check, F8, and fix errors, e.g. unavailable stock, missing batch. Post to generate material and accounting documents. 4.3 Financial and controlling impact goods issues immediately affect both FI and CO modules. Scenario debit account credit account production order 261. WIPS production order. Inventory asset cost center 201. Cost center expense account inventory asset sales delivery 601. Cost of goods sold COGS. Inventory asset scrapping 551. Scrapping expense account inventory asset asterisk CO. Integration. When issuing to a production order, the CO module tracks cost in real time, enabling accurate variance analysis at period end. Profitability analysis, COPA. Sales-related issues flow into profitability reports, showing margin impacts by product and region. 4.4 Best practices for goods. Issue 1. Enforce availability checks. Activate stock availability in movement type configuration to prevent negative stock postings. In migo, users see real-time stock and receive warnings before posting. 2. Use batch and serial tracking. For batch-managed materials, always enter batch numbers in GI to maintain full traceability. For serialized high-value items, enforce serial number entry for lifecycle tracking. 3. Integrate with production and sales processes. In PP, configure backflush to automate issue posting when production confirmations occur. In South Dakota, ensure GI is part of delivery processing to sync logistics and billing flows. 4. Leverage barcode RFID technology. Mobile devices can scan materials in bins, populating MIGO fields automatically. Reduces entry errors and speeds up warehouse operations. 5th, monitor issued versus planned quantities * run. MB51 or MC.9 reports to compare GI postings against planned orders or cost collector quantities. Address variances quickly to avoid production delays. 4.5. Common mistakes and how to fix them. Mistake consequence solution. Issuing more than available stock. Negative inventory. Process failures. Enforce availability check. Train users on stock levels. Wrong movement type selection. Misposted costs reconciliation issues simplify MIGO menu. Restrict movement types via authorizations. Forgetting account assignment. Missing cost allocations. Configure mandatory account assignment for non-PO issues. Skipping batch entry loss of traceability. Turn on batch requirement in material master settings. Issuing to wrong production order. Incorrect order costs. Validate order number. Use F4 help for search assistance. 4.6. Reporting and reconciliation. MB5. B. List of stock values by movement type. Monitor GI postings for material consumption patterns. MB51. Material document list. Filter by movement type, date, user to identify anomalies. CO reports SALR 870135558. Analyze consumption costs by cost center or order. Embedding precise and timely goods issues in your P2P cycle not only keeps your warehouse data accurate, but also drives reliable cost accounting and production planning. With GI mastered, your organization can confidently consume, move, and account for every material, minimizing stock discrepancies and financial surprises. In Part 5, we'll explore transfer postings, covering plant-to-plant moves, storage location transfers, and special stock scenarios. Stay tuned. Part 5. Transfer postings, moving stock without purchasing or consumption. Welcome to Part 5 of our Procure-to-Pay deep dive. After mastering procurement in both inbound, GR, and outbound, GI movements, it's time to cover transfer postings, the flexible transactions that let you reclassify, relocate, or reassign inventory without involving a purchase or consumption scenario. Whether you're shifting stock between plants, changing storage locations, or handling special stock like consignment or project stock, transfer postings keep your SAP inventory aligned with your physical reality. 5.1. What are transfer postings? A transfer posting in SAP MM captures any stock movement that isn't a true receipt or issue. Instead of adding or removing from total inventory, it moves or reclassifies stock from one status or location to another. Key use cases include plant-to-plant transfers, movement type 301, same company code, or 303 across company codes. Changes the plant assignment, useful for balancing inventory or relocating production. Storage location changes, movement. Type 311 moves stock between storage locations within the same plant, e.g. from bulk storage, SL0001, to picking area, SL0002. Special stock movements. Consignment, movement types 411/412, to transfer consignment stock to unrestricted use or back to vendor consignment. Project stock, movement, type 961 moves stock into project stock, and 962 from project stock to unrestricted use. Pipeline stock transfers, types 541 to 547, manage pipeline or returnable packaging scenarios. Blocked quality stock transfers. Movement. Type 321 moves blocked stock to unrestricted, and 323 vice versa. Movement. Type 551 moves to scrapping stock. 5.2 plant-to-plant transfers. MIGO-301/303. 1. Enter MIGO arrow. Select transfer posting and movement type 301, same company code, or 303, different company code. Specify material and quantity. Enter the material number and the quantity to transfer. 3. Enter source and target. Fill in from plant storage location and to plant storage location. 4. Check and post. Validate fields, then post. 301. No FI posting, purely logistical. 303. Generates intercompany accounting entries, posting debit to receiving plant's inventory account and credit to sending plant's clearing account. Tip. For high-volume intercompany moves, configure automatic account determination in OBYC to streamline postings. 5.3 Storage location transfers, MIGO-311. Use movement type 311 for intraplant moves. No financial impact, only changes the internal location. Ideal for reorganizing warehouses, moving stock from bulk to picking areas, or vice versa. Best practice. Maintain clear bin definitions and regularly reconcile physical versus system locations, using WM reports if warehouse management is active. 5.4 Special stock postings. 5.4.1 Consignment Stock * 411. Consignment issue. Moves stock from vendor consignment to unrestricted use. Reduces consignment liability. 412. Consignment return. Returns unused consignment back to vendor. 5.4.2 Project Stock * 961. Project stock receipt. Moves unrestricted stock into project stock. 962. Project stock issue. Moves from project stock back to unrestricted. 5.4.3 Other special stocks. 541 to 547 manage pipeline or third-party stock scenarios. 701 Transfer of quality inspection stock into unrestricted after QA release. Note: special stock indicators must be configured in the Material Master under the Special Procurement view to enable these movements. 5.5 Best Practices for Transfer Postings. 1. Standardized movement. Types define clear guidelines in your process documentation, so users pick the right movement type each time. 2. Use Fiori apps or customized UIs. Simplify user experience by providing targeted Fiori apps, e.g. stock transfer tile, that hide technical movement type codes. 3. Automate via EWM or WM integration. If you have SAP EWM SOX WM, trigger warehouse tasks automatically on transfer postings. Create and confirm transfer orders without manual migo steps. 4. Regular reconciliation. Run MB5T to list stocks in transit for plant-to-plant movements. Clear old or stuck transfer postings quickly. 5. Enforce authorization checks. Restrict high-impact movements, intercompany special stocks, via role-based authorizations to prevent misuse. 5.6 Common pitfalls and solutions. Pitfall impact solution. Wrong movement, type selected stock in wrong status charter location. Provide guided UIs and restrict movement types by role. Stuck in transit stock. Phantom stock in both plants regularly clear via MB5T and configure auto-posting. Missing special stock indicator movements fail or misclassify. Ensure Material Master has proper special procurement setup. Intercompany posting errors. Financial discrepancies across company codes. Validate account determination in OBYC and test thoroughly. No QA stock. Handling quality issues get mixed with unrestricted stock. Enforce posting into inspection stock via movement config. 5.7 Reporting and monitoring. MB5T view stocks in transit. MB52 stock overview by plant storage location. MB5B stock value by movement type. EWM reports monitor warehouse tasks for transfer orders. By mastering transfer postings, you'll ensure your SAP MM environment accurately reflects physical stock movements, whether you're relocating goods, reclassifying special stock, or managing consignment and project materials. This completes your end-to-end inventory management toolkit. Purchase requisition, purchase order, goods receipt, goods issue, and transfer postings. Congratulations! You've now covered all major stock movement scenarios in SAP MM. Next up, Invoice Verification, where we match GRs and POs with vendor invoices to finalize the Procure-to-Pay cycle. Stay tuned for that final piece. Part 6, Invoice Verification, MIRO, completing the Procure-to-Pay cycle. In the Procure-to-Pay process, invoice verification is the critical final step that reconciles goods receipts, GR and purchase orders, PO, with the supplier's invoice. By posting the vendor invoice in SAP MM, transaction MIRO, you ensure that your organization accurately records liabilities, clears the GR/IR clearing account, and maintains clean financial records. A smooth MIRO process prevents payment delays, reduces discrepancies, and upholds vendor relationships. 6.1. Why invoice verification matters. One, financial accuracy matches the invoiced amount against the goods received and ordered quantities. Posts the liability to the correct vendor account and clears the GR/IR account. Ensures the general ledger reflects true liabilities and inventory values. 2. Compliance and audit trail. Provides documented proof of receipt, price, and payment obligations. Captures differences, price variances, quantity variances, and discounts for audit and analysis. Tracks who posted the invoice and when, satisfying internal controls. 3. Cash flow management. Determines payment due dates based on invoice date and payment terms. Allows for early payment discounts or prevents late payment penalties. Integrates with SAP FE's payment program, F110, to automate disbursements. 6.2. The MIRO process in SAP. MM MIRO, transaction code MIRO, is the standard interface for posting invoice receipts. Here's the end-to-end flow. 1. Launch MIRO. Enter invoice. In SAP GUI or Fiori, open MIRO. Enter incoming invoice. Select document date, vendor's invoice date, and posting date, your accounting date. Choose reference document, typically purchase order. 2. Reference the PO. Enter the PO number in the Purchase Order Kind Scheduling Agreement field. The system imports line items, material, quantity received, price from the PO or info record. 3. Confirm quantities and prices. Quantity default is the GR quantity. Adjust if partial invoicing. PO price. Default price from the PO. Change only if vendor invoice differs. Invoice amount. System calculates quantity times price. You can enter the vendor's invoice total if it includes freight or taxes. These are allocated separately. 4. Handling price and quantity variances. Price variance. If the invoiced price differs, the system posts the difference to a price difference account, configured in OBYC. Quantity variance. If the invoice quantity differs from GR, adjust to the invoiced quantity and note the variance in line item text. 5. Enter tax and freight. In the Taxes tab, select the appropriate tax code, e.g. VAT, sales tax. SAP calculates tax amounts based on tax jurisdiction and posting date. In the Costs or Freight tab, enter freight or handling charges. These can be apportioned across PO line items or posted to a freight expense account. 6. Set payment terms and cash discounts. On the Header or Vendor Data tab, verify payment terms, e.g. net 30, 2% 10, net 30. SAP calculates the baseline date, invoice date or GR date per configuration, and due date for payment. Early payment discounts are automatically recognized if paid within the discount period during run of F110. 7. Check and simulate. Use the Simulate or Check function to preview accounting entries. Debit, GR/IR, clearing account for the invoice amount. Credit, vendor liability account. Debit, price difference or freight tax accounts as needed. Resolve any errors, missing tax code, mismatched company codes, or blocked items. 8. Post the invoice. Once validated, Post creates an invoice document in MM and an accounting document in FI. This action clears the GR/IR clearing account corresponding to the GR value and recognizes the vendor liability. 6.3 Journal entries and GR/IR clearing. When MIRO posts, SAP handles the GR/IR clearing automatically. Account debit, credit. GR/IR clearing account. Debit, GR value, reversed. Vendor liability account. Credit, invoice amount price difference. Account debit if invoice greater than PO. Freight tax accounts debit. Freight and tax charges. GRIR account accumulates GR postings until invoice verification occurs. Price differences and freight tax allocations ensure that the inventory valuation via GR and expense recognition via MIRO stay accurate and transparent. 6.4. Best practices for invoice verification. 1 three-way match. Enforcement * configure tolerance limits in OMR. 6 pricing and OMR 7 quantity to allow slight variances without manual intervention. Beyond tolerance, block invoices for manual review to prevent overpayments or disputes. 2. Automate tax determination. Maintain up-to-date tax codes and rate tables in OBYZ and FTXP to ensure accurate tax postings. Integrate with external tax engines for complex jurisdictions if necessary. 3. Use invoice block reasons. Define block reasons, e.g., price variance too high, missing GR, to categorize and track blocked invoices. Run regular reports, MRBR, to clear blocked invoices promptly. 4. Reconcile GR/IR regularly. Use MB5S to review GR/IR, clearing balances monthly. Investigate mismatches between GR value and invoiced value. Adjust GR or invoice postings in case of errors, ensuring GR/IR doesn't hold aged liabilities. 5. Leverage SAP Fiori apps. Fiori tile My Inbox approvals for invoice blocks. Post incoming invoices for MIRO simplifies user experience and mobile approvals. 6. Train AP teams thoroughly. Provide process flow diagrams, quick reference guides, and train on exception handling, e.g., negative invoice amounts, credit memos. Encourage documenting discrepancies in header item text for audit clarity. 6.5 Common pitfalls and mitigations. Pitfall impact mitigation invoices, posted without GR/IR account imbalance. Unapproved receipts enforce GR first policy. Block MIRO if no GR exists. Incorrect tax codes. Tax miscalculation. Compliance risk. Automate tax code determination. Periodic tax master audit. Invoice variance, not blocked overpayment, or disputes set strict tolerance limits. Use MRBR for review. Wrong vendor account liability misposted. Reconciliation issues validate vendor via dropdown. Restrict vendor entry. Delayed invoice posting. Late payment fees. Inaccurate financials. Define SLAs, use reminders or alerts for pending invoices. By mastering invoice verification in SAP MM, you complete the procure-to-pay cycle. Ensuring goods received are matched to orders and invoices, liabilities are accurately recorded, and financial books stay balanced. With MIRO optimized, your organization benefits from tighter controls, cleaner audits, and stronger vendor relationships. Up next in Part 7, we'll deliver a concise conclusion and call to action, summarizing key takeaways and guiding viewers on next steps, like advanced topics, downloads, and playlist navigation. Stay tuned. Part 7. Congratulations! You've journeyed through every critical step of the procure-to-pay process in SAP MM. From capturing demand with purchase requisitions to converting those into precise purchase orders, confirming receipts with goods receipt, managing outbound stock via goods issue, and finally reconciling invoices with invoice verification, you now have a comprehensive understanding of end-to-end inventory and procurement in SAP. Let's tie everything together and highlight how to apply these concepts daily and what your next steps should be. 7.1 Key takeaways. Recap. 1 Purchase requisition PR. Your organization's shopping list that defines what, how much, when, and where to procure. automates approvals through release strategy, ensures data accuracy up front, and serves as the foundation for purchase orders. 2. Purchase order, PO. Formal commitment to vendors created in MIG-21N, either directly from approved PRs or after competitive RFQ processes. Leverages purchasing info records and outline agreements for standardized pricing, terms, and long-term contracts. 3. Goods receipt, GR. Transaction MIGO to 101 for PO receipts. Updates inventory and post-debit to inventory and credit to GR/IR clearing. Quality integration, barcode scanning, and cycle counts optimize accuracy. 4. Goods issue, GI. Reduces inventory for consumption by production orders, cost centers, sales delivery, or scrapping. Movement types like 261, 201, and 551 post to both CO and FI, ensuring costs land in the right buckets. 5. Transfer postings. Movement types 301, 311, 411, etc. Lets you reclassify, relocate, or reassign stock without financial impact, except intercompany moves. Essential for plant transfers, storage location reorganizations, consignment stock, and project stock management. 6th, Invoice Verification, MIRO. Final reconciliation of PO and GR with vendor invoices. Clears GR/IR and posts vendor liability. Handles price, quantity, tax, and freight differences, enabling accurate financial statements and cash flow planning. 7.2 Everyday Application Tips. Daily monitoring. Use SAP reports like ME2N/ME2L for PR/PO status, MB51/MB5S for GR/IR balances, and MB52/MB5T for stock movements. Exception management. Leverage SAP Alert Framework or Fiori notifications for blocked invoices, MRBR, pending approvals, or stock discrepancies. Continuous improvement. Host regular workshops with end users to review pain points. Update release strategies, simplify movement types, and refine templates. Cross-functional collaboration. Coordinate with FI, CO, QM, and WM teams to ensure every movement flows seamlessly through financial, quality, and warehouse processes. 7.3 Mastering Advanced Topics. Once you've solidified core P2P operations, consider diving into these advanced areas. SAP S/4, HANA Advanced ATP AATP, real-time availability checks and supply chain promises. SAP Extended Warehouse Management, EWM, detailed warehouse task management and automation. SAP Ariba, integration, cloud-based procurement collaboration, and supplier networks. Embedded analytics, real-time dashboards for procurement, KPIs, and spend analysis. Robotic process automation, RPA. Automate repetitive tasks like GR postings or invoice blocking. Exploring these technologies positions you as a strategic asset, transforming procurement from transactional to truly digital. 7.4 Next Steps and Resources 1. Download the free SAP MM Quick Start Guide. Consolidated cheat sheets, transaction codes, and best practice checklists to keep at your desk. Link in the description. https://jakasjaikaiabdullah.gumroad.com YaQPURM. It's a 1, 2. Subscribe to SAP IFI Academy. Weekly deep dives into SAP modules, career tips, and live Q&A sessions. Hit the bell icon to never miss an update. 3. Join our community. SAP Community LinkedIn group and Telegram channel. Ask questions, share insights, and network with fellow learners. 4. Practice in a sandbox. Use SAP Live Access or demo systems to reinforce your skills. Build mini projects like create a blanket purchase order or simulate a three-way match. 5. Get certified and showcase your expertise. Consider SAP S/4 HANAMM certification. add it to your resume and LinkedIn. Share your knowledge via blog posts, forum answers, or YouTube shorts. Teaching is the best way to learn. 6. Apply for entry-level roles. Look for SAP MM support, junior analyst, or procurement coordinator positions. Use your portfolio of mini projects and cheat sheets to demonstrate hands-on competence. 7.5. Call to action. Your P2P mastery starts now. Smash that like button. If you found this series valuable, and drop a comment with your biggest learning takeaway. Your feedback shapes the next videos. Ready for more? Check out our SAP MM playlist, link on screen, for Module 1 through 6, or jump into our Careers playlist to learn how to land your first SAP role. Download the Quick Start Guide here. https://kayabdullah.gumroad.com XLQPURM. Let's transform procurement together, one transaction at a time.